A top focus this Tuesday morning on NDTV viewers. Now, shortly after the mother of all deals was agreed with the European Union, US President Donald Trump has now confirmed that India-US trade deal has finally been agreed upon. PM Modi has hailed the tariff reductions from the US, saying that Trump's leadership is crucial for global peace. He also congratulated Trump, needless to say, saying that when two large democracies work together, it's the people who eventually benefit. Now, Trump, in his typical style, took to Truth Social, announcing that the US will be reducing the prevailing tariffs to 18%. Not only this, he also claimed that PM Modi has committed to stop buying Russian oil and to start buying American instead. Now, through this agreement, the reciprocal tariffs imposed on India have also been lowered to 18% from the whopping 50% we were seeing for over a year now, while securing breathing room for domestic reforms and also securing export gains for Indian manufacturing and services. Meanwhile, listen into this conversation between US Ambassador to India Sergio Gore and my colleague Vishnu Shom.
Ambassador Gore, is this premised on India buying Venezuelan and American oil as a way of India stopping the import of Russian oil?
I don't want to get into too many details. I'll let the trade negotiators announce those specific details. The one thing I will say is both the Prime Minister and the President have supported bringing this conflict in Russia and Ukraine to an end. And so that's something that both sides have been in agreement on over a long time. The Prime Minister wants to see peace over there also, as does the President. And so tonight is a night to celebrate that this deal is now behind us. To put it into perspective, I will share with you that the European Union and India took 19 years to negotiate the deal. And so, people were saying, why is this taking so long? It didn't take anywhere as close or as long as the European Union. So we're thrilled by that. And again, I will say that is because of the leadership of the Prime Minister and the President.
Oh, just a point of clarification. The tariffs have come down to 18%. So, in other words, the additional tariffs placed on India's import of Russian oil have also gone away. So the total tariffs right now stand at 18%. Is that right?
The total tariff will be 18%, and that will be finalized over the next few days. There's some items that need to get signed, but the total tariffs will be at 18%.
Well, there you have it, Sergio Gore speaking exclusively to my colleague Vishnu Shom. Now, Donald Trump has also purportedly said that India will stop its oil purchases from Russia and start buying American and oil from Venezuela instead. My colleague Kate Fisher gets you the latest on this from Washington, D.C.
US President Donald Trump broke news of the deal on social media following a phone call with the Indian Prime Minister Narendra Modi. Tariffs on Indian products will drop from 25 to 18%, while the president said that US goods will enter India tariff-free. But he didn't specify when this would start. Indeed, the post was scant on detail, and the White House has not followed up with more. The breakthrough seems to have come with Prime Minister Modi's promise to stop buying Russian oil and instead buy much more from the US or, as Donald Trump suggested, also from Venezuela. The president says that Mr. Modi has also committed to, quote, buy American, and that was in full capital letters, along with an additional $500 billion to be spent on US energy, technology, agriculture and coal. Although in his post, the Prime Minister made no mention of either the oil or the extra investment. Now, previous trade deals with other major Asian trading partners like Japan and South Korea have included commitments to invest hundreds of billions of dollars into US industries. But the India announcement did not mention any specific investments. It will be a tall task for India to end its import of Russian oil, given that it makes up more than a third of India's overall oil imports. But President Trump said that Prime Minister Modi had agreed to replace India's Russian crude imports with oil from Venezuela and the US.
While we await an official response from the MEA on Trump's claim of India totally stopping to purchase Russian oil and starting to buy Venezuelan oil, my colleague Vishal Vivek now quickly takes you through what all, and most importantly, where all does India stand to gain from this trade agreement. Vishal, take it away.
colleague Kate was right when she said that the deal is scant on details, but we have some things that we can look at. The first one, of course, would be the fact that the whole tariffs, the overall tariffs have been reduced from 50% to 18%. That's what we have up on screen. And faster access for Indian exports to US market. This will be one of the key components of the deal when Indian companies would have access to the US market. That would mean diversification of the markets for Indian companies. That's a big positive sign for Indian companies. Export gains for Indian manufacturing and services. Export gains would mean many companies that have been standing in line to increase their exports to the US side, they will have fresh opportunities to do so. This will be one of the biggest points of the whole deal. Energy security via diversified oil and gas sources. This is one of the most key points because India has mostly been reliant on the Russian side for the oil imports. This would mean diversification because Trump has claimed that India can buy oil from US and possibly Venezuela. Energy diversification reduces geopolitical risk. This is also a crucial point because India, as I mentioned, is reliant on Russian oil. That has sort of bent India towards the Russian side on the geopolitical stage. This would mean diversification, and that would mean balance in trade deals and other deals for the Indian side. Moving on, there will be global diplomatic edge, and also the fact that this emerges as this positions India as a deal maker after twin trade deals, because remember in the last 1 year or so there have been at least 3 trade deals actually. India-UK deal, India-EU deal, and now this deal, which we have the first stage. The remaining stage remains. The global diplomatic edge on Russia-Ukraine war has also been established because, as I mentioned, India is one of the few countries that had a unique stand on the global stage as far as the Ukraine war is concerned. This further pushes that narrative and long-term stability in bilateral trade relations. So this is what the long-term, bilateral trade relations could be looking at. But so far, this is only the first stage. The remaining conversations remain. So we'll have to look at all of that. Back to you.
Well, my colleague Vishal telling us what India stands to gain from this deal which has been announced. Of course, we are waiting for the fine print, most importantly, to still come out. But on that, NDTV Profits Managing Editor Tamanna Inamdar also joins us on this broadcast. Tamanna, first and foremost, which Indian sectors are likely to benefit from this cut and which Indian industries might actually lose out on this deal?
I think it's a win-win, Arjun. This is the deal that the Indian markets, industry, corporates have been waiting for the better half of the last 6 months. Right. And across the board, there's going to be a sentimental positive. As far as the sectors are concerned, think about export-oriented, export-facing sectors. So textiles, leather, gems and jewelry, some food products like rice, etc., especially basmati. This was what could have been hit and was getting hit with an effective 50% tariff. Now, these get an immediate boost, but it's the here and now. And I would like to draw your attention to what Indian markets are going to look like this morning. The implied open for the Nifty is looking at maybe a 700-point jump up. So think about all of the pain that the markets have been seeing in the last 2 or 3 months gets wiped out maybe this morning if the implied open pairs out how it is. You also have to look at it in relative basis, because while some sectors will benefit, what is India's effective tariff versus nations in the neighborhood? So Indonesia has a 19% tariff, Vietnam 20%, Bangladesh 20%, and importantly China 34% with the US. So India at 18% is sitting pretty right now. I mean, this is a deal that came maybe later than most would have hoped for, but it's definitely one which is a win-win on both sides.
Very important point you raised there about the markets, which was, in fact, my next question to you, Tamanna. Now, another important question that springs up here is what investors should be looking and rather watching once the deal details emerge. Of course, we're waiting for them to come out, but what are those one or multiple key points that investors should keep a specific focus on?
You know, frankly, the nitty-gritties and the detailing of the deal is not going to matter much to market sentiments. The way markets work is that they discount the news or they react to the news as soon as it comes in. So the inking of the deal and the actual of the deals may take some time. And unless there are some devil in those details, you're going to see the first reaction at 9:15 this morning and at 9 a.m. when the pre-open session begins. So you're going to have a huge gap up opening. That is very, very likely because this was the last bit that wasn't working out from Indians' perspective. Foreign investors have been selling from Indian markets consistently over the last 2 or 3 months. And now they have a reason to come back to the China plus one kind of a model in terms of investments. The geopolitical isolationism, which was a concern as far as India as a market goes, is now out of the question, right? We have this great deal with the European Union, we have a deal with America, and there is enough reason for foreign investors to come back. As far as investors are concerned, they have to now maybe look at which companies and which stocks are rising the most and look at maybe booking out profits after a few days.
Yeah. Well, I'm also joined by NDTV Profits Executive Editor Nisha Poddar. Now, Nisha, we've seen US demands on sectors like data, agriculture, even IPR for that matter. Now, do these demands, as we've seen from Trump's status there, including that $500 billion purported investment in energy, do these demands complicate or could they complicate the next phase of this deal?
So in this, it was clearly visible that oil politics and oil diplomacy of the US was one of the prime factors which really pushed US to actually sign a deal quickly with India in this particular respect. And that was also one of the most important standoff points between India as well as the US, where India earlier came out as a much stronger nation looking out for the interests of its own people and buying Russian oil. So that was one of the biggest constraints. And therefore, with India really agreeing to stop using Russian oil and also recalibrate its purchases and go more for US oil as well as Venezuelan oil and assets, which is under US control, that really turned the tide in favor of this particular transaction happening. Also remember that with European Union, we have done mother of all trades. And that was also one of the tipping points because somewhere, as jokingly said, that US had a FOMO when it comes to the India trade deal. So the standoff, in fact, two important aspects that came out from the US narrative and the comments that have been made by the US ambassador. One was that Sergio Gore, when he was in India, he made a very famously known comment that we are good friends with India. And that really turned the tide on the market. And it was quite visible at that time that this uncertainty is expected to go. Yesterday, after clarifying the tariff situation, that it is from 50 to 18, Sergio Gore also made a mention that with EU, India took 19 years to sign a deal, while with the US, it is still much shorter. Remember, it is from April last year that the overhang of uncertainty of US tariff has been hanging on India's economy as well as manufacturers and exporters. And this comes in as a very, very big clarity. And the overhang of this uncertainty going in is going to be one of the biggest boosters for the Indian market and also economy at large, where we were struggling with the biggest market for India, that is the US market. And now with 18%, we are looking like we are one of the most trusted allies of US with this kind of lower rates, which is very competitive compared to the rest of the world.
Well, a very important point you raised there, Nisha. I'll take it across to Tamanna there. Now, Tamanna, could this, speed up the China plus one shift to India?
No, definitely. From the perspective of global foreign investors, what was happening so far is that every global investment house has an emerging market fund. And India's share in that fund was beginning to shrink for a couple of reasons. Also, remember, this is going to have a positive impact on the rupee. Watch out for how the rupee opens this morning. As the rupee was depreciating, any investments in India were becoming less beneficial because when you pull them out, you're actually losing currency. and in that exchange rate. So you have more and more reason for foreign investors to come back. And while we have a very strong cohort of domestic investors, all of us pay our SIPs every month, that is what has saved the Indian markets thus far. With the foreign investors coming back as well, which now they have enough reason to, and I'm talking about basically investment and hot money right now, this is going to be great for markets. On the China plus one factor, even from a point of view of large buyers, I'm not talking about stock markets now, I'm talking about large buyers, makes sense to buy from India because you have a better rate than China, which is around 30%. You're at 18%. You're a more trusted partner geopolitically as well. And now inking of this deal has made it clear that India-US trade relations and the relationship between the two nations, which has been a long-standing bench strength, is now only improving. So the China plus one factor also becomes very important, and the outflow of money which was going from emerging market buckets out of India and maybe towards China could now start coming back.
Right. Nisha, I'd come to you now, playing the devil's advocate as we always do. Now, in the absence of any long-term treaty, how vulnerable is this current deal? As we've seen Trump's flip-flops over this year and in his first term as well. So how vulnerable exactly is this deal in the absence of any long-term treaty?
That's right. But any of these US tariff deals will need now. It is just the deal that is signed, and the headline figures have really come out. Like in the case of EU, when we had checked with the experts, there is a whole mechanism of every word, the language that is used in the tariff negotiations, and every data that gets negotiated and also goes through legal scrubbing, which in case of the European Union treaty and the trade deal will take 6 months. So that should take a few months for the legal scrubbing and for clarity on the kind of wording and language that comes out. But if you ask me that will it be vulnerable with the flip-flop that Trump has shown, unless something very big really takes place globally, chances are minimum, because for India, US is a large market, the largest economy in the world, for the fastest growing economy in the world is important. But equally important is for US the Indian market, because we are a growth market where many MNCs from US are present here. They have been doing business here. And when I have been speaking to those multinational companies based out of US who have a huge presence in India and see their growth potential, they remember, have been feared, they have been scared about losing India business because of the way the India-US tensions were escalating when it came to the tariff war. And so the MNCs, there is a huge market, there are huge lobbyists from the corporate world in the US who also wanted and pushed the US government to really come to a conclusion with India, because they cannot afford to lose the Indian market for their business potential. So it's a win-win from both the sides. It is not any one party which has made any desperate attempt. India actually stood its ground because it knows how important the Indian economy is for the US. So it's a win-win for both. Chances of this derailing in future could be minimal, but yes, flip-flop taken, because unpredictable nature of Trump is one thing to be watched out for as a risk factor.
Well, there you have it, the bottom line, viewers. It's a win-win, or so it seems. And of course, we're all waiting for the details which are expected to come out sooner than later. Nisha and Tamanna from NDTV Profit getting us the latest on this story. Meanwhile, now let's show you where tariffs on other countries stand with respect to India. First up, we have India with a renewed 18% tariff. Now, the US has agreed in a recent trade deal only last evening, right around midnight, to cut its tariff on Indian imports to about 18%, down from a whopping 50% to deepen economic ties. Now, next up, we have for you Brazil. Brazil faces one of the highest US reciprocal tariffs, around 50%, under the Trump tariff system. Now, the rate reflects US efforts to pressure large exporters and address trade imbalances. And how can we forget China when we are talking about trade and tariffs imposed. Now, Beijing is hit with significantly elevated US tariffs, around 37%. Now, it's part of ongoing trade disputes and supply chain adjustments as well. These high tariffs are also, by the way, aimed at reducing US trade deficit and encouraging domestic manufacturing. From China, we take you over to Canada and the Western Hemisphere, where Canadian goods now, in fact, face approximately 35% tariffs under US reciprocal duty plans. Now, this high rate is a part of broader shift from previous trade deals, reflecting Trump's America First preferences. From Canada, we travel to South Africa, whose exports, in fact, are subjected to about 31st tariffs under Trump's 2.0 policy. Now, this also puts a heavy cost on South African goods entering the US, especially manufactured products that are manufactured inside South Africa and, in fact, are exported to the US. We shift our focus to Southeast Asia. We come to Vietnam, which faces roughly around 20% tariffs on its exports to the US. Now, this reflects that the US is responding to significant trade surpluses Vietnam holds with it. Finally, we move on to the big one, the European Union. It's seeing around an average of 15% tariff on exported goods under Trump's reciprocal tariff regime. Now, these tariffs apply to a wide range or a wide array of products despite long-standing trade cooperation. Speaking of Japan, the country's exports are subject to about similar 15% US tariffs, comparable to several other US allies, just like the European Union, as I was just mentioning. Now, the rate reflects Trump's broader policy even towards its strategic partners. Speaking of strategic partners, we get United Kingdom next for you, which has one of the lower US tariff rates, around 10% under the current tariff list. Now, this relatively light tariff signals strong bilateral trade terms compared with some other emerging markets we just showed you, which are also a part of Trump's tariff list. Meanwhile, we get you some reactions from top global experts on this deal.
Clearly, I think it'll give the two sides something to be very happy about. It'll provide, I think for a good news story, so to speak, at a moment when these high level engagements between the US and India in recent months have so often been, feature these caveats about how the relationship is in tough shape and that the two sides need to try to work to make things better. Now you have a success story in the form of a trade deal. And I really don't know, again, if Jaishankar's visit is tied to this. I mean, he's, of course, here to discuss other matters, such as critical minerals. But I do think that it's an indication that this relationship is getting closer to being back where both sides, at the end of the day, want it to be.